All right, all right. Ladies and gentlemen, we are ready to start here with Mark Putrino, former hedge fund manager. He's been in Wall Street for about 20 plus years, current chief educator at the Benzinga Trading School. This man is traded right next to Steve Cohen, Mario Gabelli, multi-billionaires, so that if you are new in trading, this is the guy you need to listen to, okay? We have a lot of different types of traders, crypto traders, option traders, scalpers, swingers, everything. So you're going to have the pleasure to sit here with Mark Putrino. We're going to discuss trade ideas, education, a little bit about options, technical analysis, a whole bunch of stuff. Let's go ahead and bring on the man of himself, lead trader, educator, best friend at the trading school, Mark Putrino. I think we have him in the back here.
Hey.
What's up, Mark?
Hey, what's up, dude? How are you?
Killing it with SQQQ. How about you?
Well, I'm not killing it with SQQQ, but I wish I was. But
yeah, it's definitely. I was in the class a little bit earlier today. I know there's a ton of stuff you're going out there with the students, showing them everything from all these sorts of different strategies they use, right?
Yeah, one thing is people shouldn't be afraid of down markets because you can make money in a down market. Just like Rodrigo is doing here. There are ETFs that are designed to move in the opposite way of the market. There are ETFs that are designed to move in the opposite way of the market. So a lot of investors don't even know that. They think if the market's going down, the market's going down. And then the typical response is go to cash, go to cash, go to cash. And, a lot of these people don't even know that these inverse ETFs exist. In a lot of ways, it's easier to make money on the downside than it is on the upside because markets go down faster than they go up because they go down on fear and they go up on hope. So anyway, let me just give you guys a little bit of my background. So I was back in business school back in the late 90s, and I met a man by the name of Mario Gabelli. I'll show you who he is because he's still pretty active. One of the most brilliant men I've ever met in my life, frankly. And I've had Nobel-winning prize prize professors. So Mario hired me. I spent my first 2 years trading for him. And then I made a move over to trade with Steve Cohen over at his hedge fund. And I spent some time there. And he's what the show Billions is supposedly based upon. But now he's, I don't know how much he still trades. I probably still a lot. But he is, he's the owner of the New York Mets now. I left there and I was the head of trading at an institutional money manager. Well, I was the head of trading at 3 different institutional money managers for about 5 years in each place. And so I've overseen, there's not much I haven't seen when it comes to trading. I've overseen the trading of hedge funds, fast money, options, currencies. So yeah, when it comes to trading, there really isn't too much that I haven't seen. So about 5 years ago, I decided to make a decision to leave the industry because it's just changed so much. It wasn't fun anymore. Right. There's so much, everything's done electronically. There's not the relationships that there used to be. And, I spent a year or two trying to figure out what I wanted to do. And I thought, what, with my skills, there are a lot of people now that I can teach.
Yep. Are you good with the audio there?
Yeah, I can hear you.
Okay, cool.
Yeah, so I got this skill set where I can help people learn how to develop their own trading styles. And so far, some of the students have been very successful. The students that come to learn and are open-minded to unlearning things tend to do very well. So.
Right. There's a lot of market gurus out there, a lot of these marketers, if you will, that unfortunately go for the new traders. And, if you don't know anything better, who's going to kind of stop you from it, right? So that's why I feel the trading school fills a huge gap that had to be filled, right? We all know, right?
When it comes to trading, it's what's pretty interesting is that to me, it's like most people realize like, all right, well, if you want to be an auto mechanic, you got to learn how to fix things, right? If you want to be, a lawyer, you got to go to law school, right? But people think that they can just start trading and make money. And that's why 90% of beginning retail traders end up losing, because they don't acquire the skills that they need to recognize when the market's going to change direction or make moves. So in the class, we try to teach the skills that people use to learn how to make money, understanding if something is overbought or oversold, what trends are, what momentum is. And that's what the institutional traders look at. People think that these great traders have these like super secret systems and stuff. And that's just not the case. That's not how it works in the real world. The difference between the people that are successful and the people that aren't are the people that are successful understand the basic market principles. And we have 8 classes, and we have a class on each one of these. One is knowing where the important levels are in the market, what's important support, what's important resistance, knowing what the trend is and what's the momentum driving it. And
Mark, you want to go ahead and share your screen there so you can kind of show the folks there what you're referring to in the charts and all that.
Yes, indeed. Let me just get up here and I will share my screen. All right. All right, so this here is the S&P 500. And usually when we start our analysis in the morning, we look at this because this is the broadest benchmark. And then what we do is we go through the various sectors. There's 11 sectors, and we look and see what they're doing. And that's one of the things that we talk about a lot in the trading class is, you don't guess. You let the market tell you what to do. The market speaks a language. And what is that language? Well, the language is how it reacts when it gets to a level of importance. For some reason in the stock market, some levels are more important than others. Sometimes we know why, and sometimes we don't know why. So let me just take a look at this, show you guys something on this technology ETF here. All right. And I just want to show you, because this is a pretty clear example of how just some levels are more important than others. So if we look back here, right, notice how the levels that were support, this is 163. So knowing that the levels was support, and then it turns into resistance, right? So for some reason, 163 is the important level here. It's not 168 or 158. It's right around 163. So the market goes down here and finds support. And this is a large group of buyers and support here. And then when the market gets lower, a lot of the people that bought it have experienced buyer's remorse, and they tell themselves that they want to get out, but they don't want to lose money. So they try to sell their stocks at the same price that they bought them at. And if there's enough sell orders from these remorseful buyers, then we get something like this, right? Support becomes resistance. So knowing where these important levels are is like the first step to learning how to trade. It's if you don't know how to read these charts, and a lot of people, and I can understand why people don't, because there's so much mystery out there. There's a lot of misinformation. There's a lot of people that think they're experts because they traded in a bull market. But if you don't know where these levels are, then you're going to have a hard time. Like, just say hypothetically you bought this at 143 and you told yourself, hey, if it gets to 170, I'm going to sell it. I think it's a good buy. But you didn't realize that there was this resistance level around here. you would have missed the trade because you didn't know which level was important. So as an institutional trader, this is the type of stuff we focus on. We don't have secret systems. You know, we don't have like ultra complicated models. The 5 years ago, when the whole AI craze hit Wall Street, you know, everyone talked about AI. Those funds have actually underperformed. The hedge funds that use AI to make their decisions have underperformed the market significantly. And the reason why is because I don't care how many parameters you look at, you got to pay attention to the basics, right, of psychology. So this right here is psychology. This is buyer's remorse, right? Buyer's remorse is an emotion. When we look at a chart, we're not looking at just, you know, it's crazy lines. We're looking at supply and demand resistance, or supply and demand levels, at least if we do it right. So the trouble with these AI funds and why they haven't outperformed is because they assume that they use statistics and probability theory, which assumes that people are logical, and they're not. Like, what's kind of interesting today is I'm sure everyone's kind of seen Meta or Facebook. Look at where it is today. I put Facebook or Meta or whatever. People like to buy things at nice round levels, right? So what could be a nicer round level than 100? There's a lot of people out there that say, hey, if Facebook gets to 100, I'm going to buy. They don't say if it gets to 98 or if it gets to 101. They say if it gets to 100. So this is a perfect example of a stock of a psychological level that's important. Okay. So when there's some levels can be important because they were resistance or they were support. Some levels are important because they're psychological levels. And a lot of people say, hey, I'll buy at 100. And I think if this holds at 100 over, you know, the rest of the day or into tomorrow, there's a good chance it rebounds. But I would wait for the rebound to start. I wouldn't just guess. I wouldn't just buy it now. And that's part of the market telling us what to do. I mean, you could, tomorrow morning, this thing could drop another 20%. I think long-term, the prospects aren't that good. So what we do to get a trading idea here would be to say, let's pick a level that if we're expecting a reversal, what level do we have to pass to have some confidence that that reversal has actually started? And I'm just going to just say 105 because that's a psychological level, right? People were probably saying, oh, I'm going to buy it at 100. I'm going to sell it at 105. Well, I wouldn't buy it until it got up to, say, 107, right? And you would say, well, Mark, why would you buy it at 107 when you could buy it at 100? And the answer is because it could still keep going down. So trading is all not about being right. It's about making money, right? A lot of people get too concerned with trying to buy at the bottom or sell at the top, and it just can't be done. It's just not possible. The greatest traders in the world can't do it. Paul Tudor Jones said facetiously, you're always going to buy stuff that goes to infinity. You're always going to sell stuff that goes to zero. You're always going to sell stuff that goes to infinity, and you're always going to buy stuff that goes to zero. So Paul Tudor Jones is one of the great money managers, like a Gabelli or a Steve Cohen. And that's his way of basically saying, you know, you're not going to be able to get the exact top or the exact bottom. If you wait for the reversal that you're expecting to happen, then the odds are much better in your favor that it's going to continue. So my trigger, every trade should have a setup, a trigger, and a target. The setup is like when pretend you're you're a sprinter, you're at a race. When it's like, get ready, get set. So the fact that this is holding a psychological level and it's at it's going to be oversold is the setup. That's the, hey, get ready, get set. The go would be when we cross this 105 level. And that tells us that there's a good chance the trend is going to continue. So it's about risk reward ratios. And if you wait for the reversals to happen, too many people try to do what we call catch a falling knife on Wall Street, right? They try to get the bottom and they're just guessing. Things find bottoms around former support levels or former resistance levels or psychological levels like we see here. And then they could keep going down, right? So some people that try to catch the bottom, they're just guessing. They don't have a logical reason for buying it other than, oh, I think this is the bottom. Here, we have a logical reason, which is our setup. We're oversold and we're at an important support level. If we get back up here, that'll give me some confidence that this uptrend or reversal that I'm expecting, which I think could happen and probably will happen, but it's not about me. It's the market's going to know what it's, the market's going to tell me. And if Meta gets above this 105 level, that could be it saying, all right, the reversal is underway. Now for the target, I would go up here and I would pick a former support level, because as we've seen, the support could turn into resistance. So that's where my target would be. So we have a setup, a trigger, and a target.
Right, maybe we can look at Apple also, because it looks like, so folks, even the most advanced traders, they started reading charts. If you can't read a chart, it doesn't matter what you're doing, calls, puts, crypto, you're going to lose money. And very interesting, Mark. I know you have a class called Levels. Very interesting to look at that low of day for Apple, that level specifically, especially for the people that trade quicker, because everybody has different styles in the school. But what do you see in Apple for the day? And also, what are your thoughts on just overall, all these huge companies missing earnings or
well, I think that we're seeing a real slowdown. I think that we have an energy policy that is just absolutely ludicrous, which is the reason for all this. You go into the store and you hear, old ladies talk about how expensive stuff is. I think, so I think longer term, the markets, I'm not so sure longer term, but shorter term, what we can see here is the importance of a level here, right? So this is 147. So notice how it was right around the open here. It was the top here. It was the top here. It was the close here. It was the open here. On these blue rectangles, these are days where the closing price is higher than the opening price. So we opened here and we closed here. Here we opened here and we closed here. Most volume trades on open and closes. So one of the reasons why there is support is because there's buyer's remorse. No, sorry, cut that backwards. One of the reasons why there is support is because there's seller's remorse. There's a lot of people who sold in here who, regretted selling when it went higher, and they tell themselves, well, if it gets back to the level that I sold at, I'm going to try to buy it. So when you see something break through an important level like this, that's a weak sign. And this is like some really weak action here. This is probably the most important stock in the market in the sense that it's got the largest market cap, and it got up to what? An important level. See where this was the resistance last year? Looked like it was going to break out, but it reversed. So now as a day trader, I would kind of use the same strategy that I just talked about, but on a shorter term. Most of our students, I get the sense, are day traders or shorter term traders, and a lot of them trade options. But we do have all styles. We do look at earnings statements like we were looking at First Boston this morning. But just as a day trader, I'm going to go to the 1 day chart, and my entry point would have been when this support got broken. So if I was a day trader, I would have taken the short side of Apple, whether you're a put buyer or there's those inverse ETFs now. The breaking of it failed to get through this resistance, and this would have been my signal to get in on the short side, the fact that it didn't get through this resistance. Because when things get to resistance and they don't break through, they tend to sell off. And that's because there's a lot of sellers there. Now, picture in the old days, like when they used to trade down on the floor, or now they do in the pit in the Chicago Board of Options Exchange, right? There's a bunch of people trading around 147, trading 147, 147. Then maybe someone notices, hey, someone who's a big buyer just finished their order and they left the market. Or they see more sellers coming into the market. They say to themselves, gee, you know, I better lower my price because I want to sell my stock. And we got all these other sellers coming in, and eventually one or two of them are going to knock the price down. So I'm going to get in ahead of them. And it starts this cascading effect. So this is the reason why when things get to resistance and they don't get through, they tend to drop pretty hard. You can even say the same thing about this morning, right? So by knowing where these levels are, it lets us know where to get in, where to get out. By understanding the momentum, that helps us, because if something is overbought or oversold, if something is overbought or oversold, it tends to be like you can think of overbought or oversold as like a rubber band, right? So I'm going to bring up this Credit Suisse trade, and this Credit Suisse, and tell you what I would have my thoughts on here. So every stock has a typical or usual trading range, and it spends most of its time within it. If it's above it, it's overbought, and if it's below it, it's called oversold. And that's important to traders because traders expect reversions. When things get to extremes, they're like a rubber band. They tend to snap back. All right. So oversold conditions, which we have in Facebook right now, and I'm sure some of these indicators here will tell you. Yeah, so oversold conditions. You see how this has dropped so much here? This is oversold, right? Even though it's not below this line, this is comparing where it was to where it was 14 days ago. So it's comparing it to back here, but I can just tell you that this is oversold. So that's going to attract traders into the market to buy because they're going to be expecting to reversion to the mean. It's also, notice how where it stopped, pretty much right around the same level as that it did back when the news first came out. So sometimes these support and resistance levels can remain intact for a long time. That's what we call market memory. Sometimes it could literally be for years. I mean, if you look at a chart of CVS, the recent peak of last January was the same place that it peaked back in June and July of 2015. So market memory, if you hear that, that's what they're referring to. These levels can stay intact. So now we have a stock that's set up for a trade, right? It's oversold. It's at support. There's a chance it reverses, but you don't get in the trade until it makes the move, because this could just keep going lower. I would say if this starts to reverse, and I would suspect it will because it's so oversold, we let the market tell us what to do. And if this thing gets back above $4, which was important over here, there's a good chance that the trend continues. That'll tell us that the reversal is underway. The bears or the sellers have, they're done with their orders, and now the buyers are coming back into the market, and there's not a lot of sellers around. So the buyers are going to have to pay higher prices because the sellers are washed out, right? The buyers are going to have to offer to pay a premium to attract sellers off of the sidelines. So this could be the trigger, getting above 4. And then what could your target be? Well, my target would be, and this is just as a trade now, I'm talking about a short-term trade, I would say right around 420. There's probably going to be some resistance there because what would level was support tend to become resistance. So you don't need to be an astrophysicist or put it this way, there's a lot of people on Wall Street that make a lot of money that are not as sophisticated as you think they are. All right. It's like we're not looking at things like Elliott waves and Gann theory. We're just looking at the levels. We're looking at the trends, and we're paying attention to the risk psychology. Psychology is one of the classes we have, and all markets, if you got to understand that the market is, you're looking at human psychology. All right. Most of the moves in the market are occurring because of investor perceptions. Like, for example, on this particular day, October 19th, the S&P 500 was at 369. The next day, it closed at 365. I mean, what has changed in the economy that could cause it to move that much in one day? You know, the answer is nothing. It's just investor perceptions. How is it that the S&P had the exact same valuation on September 22nd as it did on October 22nd, right? Because most of this is moving by investor perception. 90% of the time, if you put on CNBC and you hear about why the market is allegedly moving, it's wrong.
Get me started with them.
What's that?
No, don't even get me started there. That's probably
that's one of our first rules
right
of it is don't shut off CNBC. That's one of our first class rules. They're there to entertain you. They're not there to teach you. And the idea of the class is that you learn how to teach yourself, so you can come up with ideas that fit your personality. Like if you're an energetic person and you like being in the news and you like being involved, you could be a day trader. If you're someone who's more, long term and more kind of analytical, and you might want to be like someone who builds models, and you got to just do what fits your personality. And I think that's a reason why a lot of people fail, because they might follow someone and it's like, oh, learn how to trade like I do. And they try to learn how to trade, but it's like fitting a square peg in a round hole. I mean, maybe you get it in there, but it's not going to stay in there for long. It's going to come out. So by understanding these principles, after a few weeks or a few months in the class, you're going to start to understand how the market talks to you. And that's where you're going to learn how to make your profitable trades. Now, this is on here from what we were looking at from a few days ago, resistance around 390. Yeah, there was resistance around 390. This got up to 388. So this is a $388 share price, and it got to within $2 of our target. So that's close enough that, we said, all right, well, this is where the reversal could start. And why did we pick 390? Did I just pull it out of a hat? No. I looked in the past and I saw, well, back here, 390 was support. Then it converted into resistance. Remember, buyer's remorse. People buy here, it goes lower, they regret buying. They tell themselves they want to get out, and they sell, right? If they can get out at the same price. Then it goes higher. A lot of the people have seller's remorse, and they tell themselves they're going to buy it back. So then we get support because you have remorseful sellers placing buy orders here. So this is remorseful buyers placing sell orders. This is remorseful sellers placing buy orders. So for some reason, 390 is the important level. So by knowing where these important levels are, we know where to sell. Like say someone bought something down here around 380 and they tell themselves, if it gets to 400, I'm going to sell it. Well, they might not get to 400 because it's at 390 is where the resistance is. So you'd be better putting an order on to sell around 389 or 388, so no one gets ahead of you. So, it's people think that, Rodrigo, when I meet a lot of people who aren't familiar with Wall Street, they think there's all this mystery around it. But our class is just the simple principles. It doesn't need to be complicated. If you just understand these simple principles of levels, trends, momentum, psychology, that's the real secret of success. So that's what we try to teach. We don't do anything bizarre. We let the market tell us what to do.
And look at that level from Apple that it just broke down from, which
that's an important, sorry, let me go back to that.
And for you guys to know, I was in the class with Mark before this. We were looking at the Qs, we were looking at Apple, and just like all the other traders out there, right? So this is what Mark means. It's not rocket science. You don't need a team of 45 analysts to make money in the markets. You don't.
Yeah, I mean, think about it. How many of these big hedge funds go out of business? I mean, we've seen a bunch of them go under. So, it's one of the lessons I'm trying to teach my kids now. It's like, just because someone is in a big, important position, it doesn't mean that they're that smart, so people talk about big money, little money, the big money makes mistakes too.
Yeah.
So
Yesterday, this guy from CNBC, he's like, he just tweeted like, I'm buying some Facebook here yesterday, and everybody was posting like, sorry, brother, sorry for you, I feel your pain. But that's like, you can't just follow people on Twitter. It doesn't matter if you see them on the news or anything like that. That's really why I think this stands out, Mark, because you show people how to stop being sheep and how to start leading themselves in their own account instead of just following other people, because that's the worst way to lose money, with someone else's advice.
yeah, well, like that person was just guessing. I mean, did they have a logical reason for wanting to buy it yesterday? We're talking about buying it today, potentially. Remember, it's not time to buy it yet. It's got to get that reversal going. But we're basing our ideas on logical principles. We're not just guessing. And I'll tell you what, this is a pretty ugly sell-off here in Apple. And as we can see, Apple, why is this level important? Well, it goes all the way back to 150. I'm going to just put this at 150. It's important psychologically that we can see was resistance there. Resistance became support. Support became resistance. Resistance became support. That broke down. Now we're up at resistance, and we failed and we didn't get through. And this gap down kind of, when you see a stock gap like this coming off a top, that's usually a sign that there's momentum to the downside. If you see gaps coming off of a bottom, that's usually a good sign, right? It shows there's aggressive buying coming in. It's the opposite for if a market's going down. If you see gaps, and what I mean by a gap is price levels that the stock really didn't spend much time trading at. It closed here and it opened here. So not that much volume traded. Some volume probably traded there, but not that much. So so this to me looks like we got some, it's got some ways to go. And I would be thinking this could get down to about I'd be thinking about buying it down around 138.
Another chart that concerns me also a little bit is looking at the Amazon chart. It's like these were going to be the last to fall, right? The biggest fall last. And now that's probably where we are now. I don't know where we are in the whole stage of, the correction of the market, but you're seeing all the big players pull up Microsoft after this. Like they're just tanking all hard right now. Not sure what's going on.
Well, when Jeff Bezos says batten down the hatches, he's someone who knows. He's not, he sees someone who knows, and he's got a lot of access to information that we don't. So they could probably see by the trends of the sales or what products we're buying or how much they're shipping. But this, if we adjust this up here a little bit too, you could see that this failed at a resistance level, right? When we say fail, it means it didn't get through. So this was resistance here. It was resistance here. Once it didn't get through, people start to sell, and then that starts the cascading effect. So that looks pretty ugly. And what we're going to look at next is Microsoft. Now, this could be something that, if the market rebounds, could be a potential buy. This here was kind of an anomaly, this move here. I forget what news this was on, but if we go back, this 225 level was resistance all the way back here, and it became support here. And even here, you got down, it only got down to 220. So we're talking about $5 on a $220 stock. So this resistance, the resistance back here turned into the support. So if this support holds, there's a good chance we rebound. Now, what would tell me what level would this have to get through for me to have conviction that the reversal that I think may happen is underway is if it gets through back above, say, the 230 level. And if you're just a short-term day trader, then your next stop is probably up here, the 234 levels, because support becomes resistance. But if you're an option trader, that's a big move, and it could happen in a relatively quick period of time. So again, things turn when they get to important price levels, and the levels can last for a long time. literally, like, you know what? I mentioned CVS before. Let me just show you that chart just to give you a good example of market memory. Let's see. So I'm going to go back to 2015.
Let's run a quick poll here. All right. Let's just run a quick poll. Give me a 1 in the chat if you have puts. Give me a 2 in the chat if you have calls in the markets. Let's get a sentiment reading here on the YouTube side and on the Zoom side. 1 for puts, 2 for calls, right? 1 puts, 2 calls.
All right. So this is an example of a perfect example of long-term market memory and why you really don't need to pay attention to the fundamentals, because how is it that CVS had the same exact valuation back in August of 2015 as it did in February of this year? You know, this is, 7 years later. This resistance around 83 lasted for 2.5 years. This support lasted for 1 year. So just say theoretically, you're thinking about buying CVS and it's in this downward fall and you say, hey, I think CVS is a good company to buy. Well, it makes sense to just not try to guess where to buy it at a logical spot. And it's like, 52 is a support level. So I'm going to wait till it gets down around there to buy it. Then when you want to start thinking about where to sell it, this could be a pretty important resistance level. So my target will be somewhere around there. So that's what as technical traders, that's what we do. We look for the levels, the levels that things could turn around at. And one of the most basic principles of the market is this. And I've known people who have literally made very good livings off just this simple trading strategy of when something's overbought or oversold and it gets support, you buy it. When something's overbought and it gets to resistance, you sell it. So remember the same rule with the inverse ETFs. You can make money if you think the market's going to go down. You wait for the inverse ETF to get to support and be oversold, because that would mean the regular market is overbought and at resistance. So I'm just trying to tell you people that you can make money when things are going down. But, the ultimate reality is that it's market the people's psychology. This is not, a lot of people think of the stock market like it's a chess game, but it's not really chess, because in chess, the rules are always the same. The pieces always move in the same way. The knight always moves the same way. The rook always moves the same way. And I think this is more like poker. And I don't mean poker in terms of gambling. I mean poker in terms of poker is a skill, requires a skill set, and it requires understanding. Like the great poker players can read other people's emotions, and two poker players could play today and then they could play tomorrow and they could have completely different results because they could have completely different emotions. Like what if one of them, got into a fight with their spouse or someone else was mad about something else, it could, hurt their emotions. So you can't figure out the stock market with pure logic. Things get disconnected, like why is CVS today? What is it doing today? Why is CVS down today 30 basis points? I mean, that's not a lot, but I mean, what's happened? Did they find one of the stores that was selling crack out of the back or something? Or, was there a fire somewhere? No, it's just investor perceptions.
Right. And so Apple looks like it's breaking down. Your call on that level was pretty great. If we lose this low of day, let's just analyze something. All right, folks, just for you to kind of get a sense of what it is, right? Right now, I have SQQQ calls, okay, which are following the Qs, which track Apple and all these other big stocks, right?
Now, I'm gonna put that up here, okay.
I'm not saying you should trade this. I'm just letting you guys know I'm in an active trade right now, and I'm just showing you how it would be if you're in the school and you have a, asking Mark. So, Mark, what levels can we start looking at, considering Apple just broke the low of day, for profit taking on these puts?
Well, I would think there's a good chance that Apple makes it back down to around here, around 138. I would say there's two levels here to watch. One is going to be here, right? So this is 143, right? So, there's probably going to be a little bit of support here, but I think that'll probably break. And I think Apple's going to probably make it down to 138. And, that's where it found support here. It was support, resistance here, support here. And like I said, this is, when you get a big move, a gap off of a top, there tends to be some follow through. So, I guess there was some stuff in the GDP report that, didn't look so good with the durable good orders down and so forth. So, bear markets can last a long time. If we look at a lot of people are saying is the bear market over? I mean, I kind of don't think so. And let's think about this. We do a lot of history in the class, because if we learn the history of trading, it helps us because people's psychology has not changed. Maybe the companies changed, but we saw a bubble in crypto stocks. We saw a bubble in cannabis stocks. We saw a bubble in the internet stocks when I first came into my career. Well, what else were bubbles? Well, back in the 1840s, there was a bubble in canal stocks. In the 1870s, there was a bubble in railroad stocks. So things don't ever change because human nature changes. The names changed. But anyway, since 1929, there's been 29 bear markets. A bear market is defined as being more than 20% off of the top. The average of those 29 bear markets is down about 35%. So that would put the S&P down to around the 320 level. Now, I would say 323 is kind of important to watch. This is kind of my longer term target, right? I mean, obviously, if the S&P turns around and reverses and it breaks 390, then it's telling me that it's going higher, right? I'm not guessing. I'm going to let the market tell me what to do. But if this is the average bull market or the average bear market, this was the 323 level. Look how important it was back here. It was really the last important point before the COVID crash. Like the COVID crash started from the 323 level, right? So this is COVID. Notice where it hits resistance, right around 323. Goes down, hits resistance around 323, breaks higher. We have the seller's remorse. It finds support around 323, finds support again around 323. So, so for the S&P to get down to around the 320 level would be just a historical average. So I would not be surprised to see the market go down. And coincidentally, if the S&P was around 323, it would be trading in line with what the historical valuations have been over the last 100 years, meaning price earnings ratio, price to sales ratio, and so forth.
Right. And you're looking at Facebook breaking that 100 psychological level you were talking about right now. It seems like it's a combination of stuff, right? All these mega caps are just feeling it, right?
Yeah. Well, you see, this is why we wait for the reversal. If we just said, oh, it got to 100 and bought it, well, guess what? We would be losing money now. Of course, by the end of the day, it may come back. No one really knows. But if we wait for the reversal, the odds are much better in our favors. Of course, it's not as good as, buying it at 100 and selling at 123 as it is to buy at 106 and sell at 123. But we have to worry about not being so precise. Trading is not about being right. It's about making money. And if you second guess yourself, I didn't get the bottom, I didn't get the top, if you don't follow your rules, you're not going to make money. This might sound kind of strange, but in a philosophical way, you could kind of look at it like this. As a day trader or a prop trader, which is institutional people that trade are essentially day traders, but they just trade, huge sums of money. The most important thing is, does the account value grow? Is the account bigger? Is your account have more value at the end of the day as it does at the beginning of the day? And if it does, if you're up 1 or 2%, that's a successful day. You don't have to have days where you think you're up 50%. If you can consistently get 2 or 3% a day over the course of a year, I mean, you're going to be up huge. I don't have my financial calculator here with me, but 1 or 2% a day is not anything to sneeze at. But anyway, a lot of people who bought Facebook just because they said, all right, well, I'm going to buy it if it gets to 100, they're just guessing. They're just, or they're like guessing, 100. They're not waiting for the reversal to kick in. So this could keep going a lot lower.
I remember when I was looking at Peloton break 100, and I was like, oh yeah, it's under that psychological level. And look at that thing now; it's like $7. Like, so that's why I'm really careful with the psychological levels. But they definitely are there. They're there. It's just,
yeah. I mean, I don't see how this company. Well, I don't want to give any opinions on it, but I don't know. I just don't see Peloton. I don't see how they can survive. This was the I guess the COVID bubble, you can call it. I met a guy back here, and it was in December of 19, and he did a detailed analysis on Peloton, and he said, in order for Peloton to make money, they're going to need, every home in the United States is going to need to have one. So had the COVID crash not happened, this thing probably would have gone like that, because this was, this never should have traded this high. The question is not why is it trading here? The question is, why did it ever trade up there in the first place? I mean, you see that with the cannabis stocks, right? We were let's just look at Tilray here, just to give you an example.
Got to thank our buddy Jerome Powell there for all his hard work.
Yeah, I think we should give him a membership to the trading school, because I think he could use it. Yeah, I mean, I was writing about inflation in August of 2000, and he doesn't see inflation until.
The other one that's always wrong is that lady, Miss Yellen. She's been wrong since like 20. She every time she's been in a position to do something, she always gets it wrong. It's like we get the worst people possibly to do things here.
Yeah, they're pretty inept, and I can tell you why. Because the Jerome Powell follows what's called Keynesian economics, and the Keynesian economics focuses on the demand side of the market, whether people are buying or selling. All right. So coming out of the pandemic, they see interest rates going up, and they figure, oh, this is good. They don't look at the supply side, which is the amount of money that's out there. Inflation comes from having more money and the same amount of goods. So they weren't paying attention to all the stimulus and all that stuff. They see interest rates going up, and they're like, oh, well, this inflation is temporary or transitory or whatever, whatever. So that's why they've been so wrong. And I know that might be hard for you guys to believe, because you're thinking, wow, Jerome Powell is the head of the Fed. Could he really be that, simple, or could the reason for his incompetence really be that simple? And I will tell you this: after the market crashed in the housing bubble, when 2008, when the market went down 50%, right after the markets recovered, they did the big financial review or whatever, and they placed a lot of the blame on Alan Greenspan, who was the Federal Reserve chairman back then. And Alan Greenspan was a big follower of Ayn Rand, the woman who wrote the book Atlas Shrugged, and he followed her economic principles. So, these people, like I said, just because someone's in an important position doesn't mean that they're that smart. So that's the reason for that. But
But
just like look at this bubble here. Like Tilray went from this stock is literally down like 95%. The question is why did it why is it trading here? The question is, why did it get up there? And that's psychological. It was like a frenzy. This was a true bubble.
A weed bubble? Or
yeah.
Nice. But so here's the thing, man. This guy Powell, right? He went from like transitory to not so transitory to soft landing to hold, like we're gonna feel pain. Like the last person that lied to me so much is my ex-girlfriend, dude. Like, when is this guy gonna stop? Like, this is just, okay, what is this guy doing? Like, should we even listen to him? But he still moves markets, right? So as a trader, like, what do you do here, Mark? What should new traders do?
Well, I'll tell you this. I still talk to a lot of my friends in the financial markets and, are in the institutional trading world. And, at this point, the Fed is just kind of a joke, just like a lot of the other departments are. So, there's just no confidence. So that's why we really kind of, let's not pay attention to what Jerome Powell is saying or what someone's saying on CNBC. What we want to do is pay attention to what the market is telling us to do, because the market is never wrong. They were going on and on. He didn't recognize inflation until I think November is when they first started talking about it. And that was the peak of the market. One of the things I wanted to show you, these students here, is there was actually a way to make money off of that. And I don't know, I've done so many classes today. I don't know if I've showed you this guy already or it was in class, but all right, I'm sorry. TBC. In a lot of the students bought this here around $20 and sold it around here. This tracks a commodities index. So you can make money when inflation is going up. So if you think we're going to keep having inflation, this is something you might want to put in your account as just kind of a hedge, because if inflation keeps going higher, your other stocks are going to go lower, but this is going to go higher. But this isn't one of the things we teach in the class, is that there's so many different vehicles and instruments and ways you can deploy your capital that it's like you can make money in virtually, well, I mean, I would say you can make money in any market at any time, on the upside, on the downside. And the reason why we thought that there was inflation here is because once a month, what's called the PMI, or the Purchaser Managers Index, comes out, and it's a report that shows what industry executives are saying. And it's it's not published by a brokerage firm, so there's no bias. And it has a list of like all of these various commodities. I think there's maybe 70 or 80. And if you looked at the report back in October and in November, there was literally, it says, prices that moved up, prices that have stayed the same, and prices that have moved down. It doesn't give percentages of everything. Every single commodity on that list was higher, right? So it was, if every commodity is moving higher, right, then that clearly shows there's inflation. And we started to get those readings like back in September and November. And then these guys finally come out and start talking about inflation in November.
Right.
So the point is, you could make money. Inflation's not a good thing, but you can hedge yourself against it, and you can even profit from it.
Right. Let me ask you something here about the real estate mortgage, because we haven't really talked about that. Obviously, home prices have been, falling, pretty bad. However, I live in Florida, and I can tell you that's not true. Like, houses here, prices just keep going higher, and you just pay a higher rate because there's a lot of people from other states that are moving here. So it's now overall, Mark, what do you think that this could cause a bigger something to break? Could this cause something to break in the markets?
Oh yeah, I mean, mortgage rates are over 7% now. If you got a mortgage at this time last year of versus now, I think you'd be paying maybe 40% more. So say if your mortgage was $1,000 a year ago and you have a variable rate mortgage, now your mortgage payment would be 1,400. But I do have to kind of wrap things up here. I'm sorry I got to go early, but I have some important family issues I got to deal with. But I just want to show Rodrigo brought up real estate, and this is the S&P 500 real estate ETF. And I just wanted to point out once again, market memory, right? This is from 2 years ago. It found support here. Where did it find support? At pretty much the exact same level. So I think you're going to get a lot out of the trading school. It doesn't matter how old you are, how much experience you have, if you're a newbie, if you're someone who's been doing it for a while. The only prerequisite I have is that you want to learn. And that's it. You want to learn and you don't want to be told what to do. We got a great community. We got, at this point, some of the our students are have gone on vacations together. A bunch of them are planning a vacation to go stay with one of them lives in Minnesota and they're going to go ice fishing, so it's a community where people are, really genuinely becoming friends. And I've become, there's maybe 4 or 5 students that I've talked to so much that I would actually consider them a friend now. Like one of the students invited me to dinner down in the city. We had a great dinner at his cousin's restaurant with a bunch of the other students. So it's a great community too. So that's a big part of it. A lot of the students really like that. But with all that, I'm going to
right. No, yeah, definitely. It's a great community. By the way, I don't know if you know, but we have Born to Be, a whole bunch of students there in the chat. Mark, can you give us a couple minutes here? We have here some closing remarks on the markets and specifically for the students here that are joining.
Well, the most important thing, this is what we cover in our psychology class. The most important rule of the market is that humans haven't evolved in a way that is conducive to trading. People make mistakes because they're emotional. They guess or they get afraid, and that makes them make mistakes. So one is you got to understand how important the psychology is. And 2 is you got to just understand these principles of how some levels are more important than others, what's momentum and what are trends. And I think if you pay attention to that stuff, you can do very well. Born to Be is a friend of mine and who's been in the class since the beginning. And I think he'll testify that he's done pretty well. I know he did pretty well on that DVC. I believe he did.
Yeah, I love Born to Be. So many great members, like real friendships. We met him in Vegas. Hopefully they can go to New York. And he says you're going to the trip too, Mark. All right, you're going to go ice fishing, Grubhub. You got to try it at least once.
All right, guys. I guess so. All right, man. Let me sign off. I actually have to take my daughter for a doctor's appointment, so I don't want to be late. Even though we'll probably have to sit in the waiting room for an hour, but you know how that is. So thanks a lot, everybody. Rodrigo's going to hang out to see if you guys have any more questions, and I hope to see you there tomorrow morning at 7:00.
All right, Mark Putrino, lead trader, chief educator, Benzinga Trading School. 1 second here before we actually give the proper send off. All right, there we go.
All right, thanks everyone. Have a good day.
All right, folks, class adjourned, but guess what? We're starting here. Something a little bit different. I'm going to show you the trading school really quick. I don't know, Born to Be, you were in the chat when I said I had those SQQQ calls. I'm still holding them. I'm waiting until I get somewhere close to maybe 100% on it, maybe around there. I think but I'm definitely selling them before the end of the day. If Apple has really bad earnings, okay, that's fine. But I definitely think that it's really important, folks, to learn how to read charts, because ultimately you're going to do your own trading. Like, that's where you want to get to. You don't always want to be like fed things, right? You also want to learn how to do your own things. So with Mark, you're able to learn the type of trading that you like, and more importantly, how to read the charts so that you can take advantage of that type of trading. As an example, if I'm buying calls and puts and I can't read a chart, the only difference between me and somebody that trades stocks is that I'm going to lose all my money when I start, because I don't know what I'm doing. Now, if you buy a stock and it goes down 5-10%, it's not the end of the world. You buy a call, it could go to zero. So that is why you need to be able to know how to read a chart. Okay. Lido, yes, Benzinga is based in Detroit. I just happen to be in Florida because this is where I live. And let's see, reading charts is a game changer. Double H, if you can't read a chart, you might as well not trade at all. Okay. I'm being serious with you guys. It's just not even worth it. Kevin, is the group geared to only options? No. A lot of people trade options because they need to learn how to read charts first. You can't, it's like, for example, if you want to be a doctor, you can't just skip pre-med, skip all these, other things they have. You have to take it, through the blocks. It's like when you want to go to, let's say you go into school and you just want to go to 12th grade and you didn't do anything in elementary. Like, of course you're not going to do well. It's like, now, like Mark was saying, for some reason, people with trading think they can just, put on a suit and, call themselves traders. So I'm telling you that the education part, you can't overlook it. It's very easy to do so. Very easy to do so because, you might see things on Wall Street Bets, on Reddit, or you just buy whatever CNBC is pumping. But ultimately, you have to take care of your account. You have to take care of your income. Because even if these people are driving, this economy and, this economy to the ground, that doesn't mean you have to let them take you down with them. You can still make money in the markets. And that's the beauty of it. I don't care. Like, obviously I don't want us to be in a recession, but if this is how they mismanage, financial policy, then guess what? Okay. I'm not going to be a victim of your bad decisions. I'm going to step into the markets and make some money with or without the Fed, it doesn't matter. If the markets go up or down, the most important thing, folks, is being able to read a chart. From there, you can determine what you want to do, but you need to walk before you run. Otherwise, you try to run, you fall, you hurt yourself, right? So here you have Benzinga Pro. It's my favorite platform. I don't trade without it. And I really don't do anything without it. So for example, yesterday, I was trading this. Today, I'm trading this. Same thing. TQQQ, SQQQ. I'm not saying you should trade options. I'm just saying that's what, like, the initial thing is to learn the technicals, momentum, all that sort of stuff. Let me show you a couple of things in pro before we move on, right? Because some people might trade stocks, individual stocks. I personally stopped doing that. I just found that my P&L is better when I don't trade individual stocks. There's a lot of manipulation sometimes by who knows who. A stock could just be up 20% and then drops 50. I don't like that. So I feel there's a lot more reliability with the markets when you're trading something like the Qs or NASDAQ, SPY, that sort of stuff. But if you do like to trade stocks, check this out because you can filter this scanner. It's the only one that's pre-market and aftermarket. You can filter it by period, also by sectors. You have all 12 sectors there. You can filter by all of them or by some of them, right? All right. So the other thing is that you can filter by the price or the market cap. So here, the other thing I like is that you can look at the volume. Now, yes, you can see what's up and how much, but I also like to see what's the, where is the volume? Well, what do you know? It's in this thing that's up 92%. And I think I've seen this thing before, but I've never really traded it. So Kevin, to answer your question, it's not geared towards options. No, this makes you a complete full trader. Okay. Melissa, hey, Melissa, how are you? Inflation is always and everywhere, monetary phenomena. Yes, we're supposed to have supposedly around 2% inflation, and that's technically good. But realize that inflation is built into the system. When you take a loan out, you have to pay the principal plus the interest. So you are automatically creating inflation on a loan per se, where if you borrow 100,000 from the bank and you have to pay 150 back, well, where is that other 50 coming from? So it's already built into the system. The problem is when they abuse it and print money like, there's no tomorrow. So this is one of the tools that I like. One of my favorite tools if I'm trading stocks. You do have something here really interesting. Let me just check here on the Qs and you can see how easy it is. I feel like I'm showcasing like a blender in those kitchen shows. Like, look at how easy it is to check this out. But it really is. Like you can switch through the tabs. And like here, for example, I have a calendar. So let me see what's popping today. So today's the 27th of October. Okay. So let's see what earnings. Okay, these are analyst ratings. Let's look at, this is a calendar. Let me zoom in so you can see. You have analyst ratings, conference calls, dividends, earnings, economic numbers, FDA guidance, IPOs, M&As. I mean, so what I do is that I go to the economic calendar, okay? And I see what's going on this week. What are we doing? Who's talking? Which one of these Fed people is going to try to, pump or dump the market? Because that's really, you have to know when these people are talking. You can't just make a trade, because it's happened to me before. I make a trade and I swear to God, I forgot that like the Fed had a meeting that day. So in my case, I have a cash account and I'm only trading options. So, you're kind of limited. There's no margin on options. You either have to get the trade, or not. So PDX, BZ Pro equals money. Absolutely, dude. Like I literally use it every day. Let me see something. Let me just check. Let's go back here to the Qs. Okay, we're still making money. All right, so I'm up 82% on my calls, on my SQQQ calls. I mean, probably going to hold them till the end of the day. Who knows? But anyways, folks, this is really so easy to use to manage your trades. All you need to do is have a window open that you can, just like this, where you have different windows opens, right? So when you're trading, actively trading, highly encourage you to at least have a chart open, right? So that you can actually see what's happening there, right? Now, I like to trade the Qs, and then I also, I also see what the Qs is what is it made up of, right? You have Apple, Amazon, Microsoft. I think it has Meta, Tesla. But for the most part, it's Apple, right? So let's just pull up Apple here. Sorry, folks, I'm a little sick today. All right. Let's see what's going on. So, I mean, Apple looks horrible. Okay. And basically, if Apple, I mean, you also have to get a sense of where these other stocks are, right? Meta, Amazon, Apple, Google, Costco, Pepsi, those are there too. Nvidia is also there, which surprisingly it's green, at least for now. So, but who knows if it's going to stay there, right? So, this has been Benzinga Pro. There's a ton of tools here. I don't know if we have enough time to really go over all of these tools, but I just wanted to show you a couple of them that I use personally for what I trade, for how I trade. So here in the economic calendar, you can filter by importance also. This is really cool. So let's say today, okay, so there's nothing important today. Let's just see, today's Thursday. Let's see what's up tomorrow. All right, there's a couple more important things here. And you have this thing where you see level 5 out of 5. I love that. It just saves me so much time. And ultimately, time is money, not just in real life, but in trading, right? Tomorrow, we have core PCE price index, month over month. We have the GDP of Canada tomorrow. Interesting. We had a GDP of the US here. Apparently, it was strong today. And if Canada is strong, who knows? And then, I mean, they're going to have to keep raising rates, right? Who knows? This is really why it's important. GDP from Germany tomorrow on the 28th, right? What else is going on? That is scheduled as a 5. And you have the CPI in Germany. It's very important because Germany was supposed to be like one of the strongest cities in Europe, right? In Japan, I don't know what's going on in Japan, but I've heard there's a lot of weird stuff happening in Japan's financial markets. So it's just, let's see what else we got there. The Michigan consumer sentiment. So this is like some really old poll that basically is how people are feeling, negative, positively. I think we all know most people feel bearish about the markets. And I think they even had a record low sentiment reading recently. I know somebody here was talking about oil. They're the US Baker Hughes total rig count. That's really, if you're trading oil, that's going to be important for you to see. That's on the 28th. Personal spending. Personal spending month over month. That's going to come out at 8:30 a.m. tomorrow. Again, we need to, tomorrow is the consumer day almost. Like, you got the consumer sentiment, the Michigan consumer sentiment, you have personal spending, and we have Apple reporting today. Let's see if they're selling more iPhones or not. And then you got the sentiment readings tomorrow. So, I mean, we could wake up in a bloodbath tomorrow in the markets if Apple just doesn't report well. So the markets keep tanking, those puts keep printing, baby. Like, this is really why Pro is so easy to use. Literally, you do all your research here. let's look at Apple where this is. It's made like 7 new lower days, right? Okay. Keep in mind the Qs cover more than just Apple, right? We look at Facebook, Amazon. Okay, Amazon looks even, I mean, look at this. Lower day, another lower day, and it's about to break that one, make another one. Amazon is big on the Q also. Apple, we just saw it. It's been trending lower. I mean, this is it's almost like you put a ruler right there, like it's just going straight down. Let's look at Google. All right, Google also. I want to see Google break this low of day, this $92. Okay. Let's look at Microsoft really quick. I'm sorry if I'm going really fast, but these trades move quickly. Microsoft, okay, hopefully, let's see. It's literally like 70 cents from a new lower day. And from the looks of it, it's trending lower, lower highs, lower lows. We got Costco. It's also in the QQQ. What's going on, Easy Mike? Costco. All right. I'm not trading Costco, but it's part of the Q, so I'm looking at it. Then we have Tesla. This thing went from red to green to blah, blah, blah. Now it's back to red, and Tesla is one of those that if it goes up, it goes hard. But if it goes down hard too. And this is really probably what we needed on the Qs to rip lower. There you go. There you go. That's what I'm talking about. Let me just check something here really quick. Okay. I might be getting close to selling these puts. I don't know. Rocket Mortgage Insurance. I don't. Lito, send me an email, man. Okay, I'll help you out. No matter. Just let me know what you need. Okay. Okay, folks. So this is really how I'm using Pro to trade like right now. Okay, I have an active trade. I showed you what I was looking at, how I'm using it. Obviously, if you're trading something different, you can always like kind of filter it to what your style is. But I always need to have a chart in front of me if I'm trading. Like, I don't understand. Like, I really wish people wouldn't do this. I don't know if they do, but like, making a trade, like buying a call that expires the same day or the day after, and then just like, go into the supermarket and do groceries, go about your day. Like, if you trade that way, you have to be there. Like, you know what I'm saying? Like, things move so fast. You don't want to miss out on the moves just because, you went out to walk your dog for 15, 20 minutes. Right? You always want to stay on top of the play and what's happening in the markets, and go with your strategy. So that's enough about Pro. Okay, so I showed you how I use it as a trader myself. By the way, this did help me a lot, improve my trading, and also the trading school did help me a lot. It also did help me a lot too. So let me just walk you through the trading school platform for all the folks that did join. By the way, quick shout out here to Bernie. We got a new member here at the school. Let's go. Shout out to Mr. Bernie. Okay. Lito, you good, bro. No worries. Benzinga, thinking we need a hot rod trading chat room on Benzinga Pro. Let him know, man. I'm here. I'm doing a whole bunch of stuff anyways. So all right. So this is where the trading school is. Let's go to my dashboard. I want to show you how this whole thing works, right? We have a really cool event on crypto. If you can go there in New York, it's going to be great. I'll be there. I would love to meet you guys. I met already several of the students. Steven, Born to Be Free. There's people that flew over from Europe even. Like, it was an amazing day. Gene also. It's just a great group of people, right? And as me and Mark, we launched this trading school. This obviously will always have a part in me, right? I always have a lot of love for the users. And I'm always pushing for new improvements and things like that, basically, just so you know, I'm always like being very vocal about that stuff because I'm a trader myself and I understand, and I can put myself in your shoes for this kind of stuff. So hopefully you guys can make it to the crypto event. And if you have questions, email me. Now the dashboard is where you see everything, right? Friday, Monday, Tuesday, Wednesday, Thursday, Monday, everything is there. You have the time, right? So for some reason, my computer thinks I'm in California and it says it's 4 a.m., but that's the California time. In reality, it's 7 a.m. Eastern, because I live on Eastern, but my computer lives on California time for some reason. So the first class is at 7 a.m. Okay, so today is Thursday. So Friday, we have office hours. Every Friday we have them. October 28th, at 4 a.m. California time, which is 7 a.m. Eastern. Okay. Then you have Monday. Okay. Monday, we're going to look at chart patterns. You have the first class at 7 a.m. and then you have the Q&A session at, what was it? It's at 12. Yeah, it's at 12. These times are confusing me, but yeah. So first class 7 a.m. So like 7 till 9, 9-ish. And then from 12 to 1 is really where you'll do the Q&A and you'll get together there with the other students. Again, everything, all this is live. And I might even show you a little quickie, video, but I want to show you like how this works first. Whenever there's a live class, you click live. Okay, and it will take you to the live class. This is where I was today, earlier, before I joined this session. You have a chart here. Obviously, you don't need to keep it there. Like I hide the chart because I always have my pro open. But if I'm trading something and I'm listening to Mark, I'll have it there. So you have a chat room here on the side. It's called Friday Office Hours because this is a dedicated chat room for the Friday Office Hours class. Okay, so the other thing, every class has its own dedicated chat room. Okay. And then, so you click live whenever the class is live. You click video library if you want to watch the recordings. If for any reason you're not able to attend the sessions, maybe you have a full-time job, maybe, anything, anything, right? You always have the recordings there where you can pop in, go through them. And here's the cool part, the live rooms, okay? We have a bunch of live rooms and they're all for a specific thing, right? So student project plan, student chart of the day, questions for Mark, okay? Again, if you cannot attend the live session, we have a dedicated chat room for you to go in and ask your question to the instructor, which is Mark Putrino, okay? Master of the Obvious, I think this is some sort of comedy. Let me just, hi, I'm Benjamin Franklin. You may know me from such things as the $100 bill. Did you know I could be literally the smartest dude to ever live? My inventions. All right, so there's obviously some sort of comedy here that Mark always does this stuff like, hey, I'm Richard Nixon. I was not. So there's also a lot of comedy in these things. I think it's really pretty hilarious. And I think it's great that as traders, we're able to have fun too, because this is a workplace. We come here to make money. That's literally what we're here for. Okay. Now, next thing you have are Mark's trade ideas. I want you to look here very carefully if you're trying to find trade setups and learn from Mark. As an example, you can see right here, overbought and resistance, UNH. Let me pull this up. I think that was today. Oh. What was that? That overhead resistance, where did he call it out? Like at 545? Okay. Yeah, well, there you go. The stock has fallen from 545. Well, it touched there and it fell. So I mean, again, keep in mind, there's a lot of information here. Make sure that you always use the right channels for the right things. You have general discussions, community support, class materials, and class files. Okay, in these class files, you will find quizzes. Okay, in these quizzes, there's a bunch of questions. They're all meant to help you so that you can learn, right? And that you're actually able to understand what you're going through. Because you have to test yourself, right? How are you going to know that if you don't test yourself, right? So those are the live rooms, okay? I know all you guys want to get back to the trade, calm down. Then you have the chats, right? You have charts here. So if you do want to pull up a chart anywhere you are, you can do that. Okay, let's just check the keys since we're already here. Okay. Let's see if we break or not. All right, and then if you click Pro, it takes you straight to Pro, which basically I'm just gonna pull it up here because I already have it. But quite honestly, I know there's a lot of tools in Pro. Truth is, I only use the chart and the scanners. I don't like and I know that other traders might want and need all the bells and whistles and things like that it comes with. Me personally, as a trader, I found that if you already have your strategy, if you already know what type of trade you want to do, you just really need to focus on reading charts because that's really your game, like getting the best entry and getting the best exit. That's it. Don't complicate yourself. Now, if you're trading options, this is pretty much, if you want to look at, scanners with options and things like that, you can do that. But you know, it depends really what you're trading. There's so many different strategies that like what works for Warren Buffett is not going to work for me or for you. Um, you know, like whatever works for these people on CNBC doesn't work for you or for me. Like as traders, I'm not thinking 10, 20 years ahead. Like I don't even know what's going to happen then. Like I'm trying to trade what's in front of me today or at least this week, you know, but I'm not trying to predict the future, especially in like the middle of a recession, right? We don't know what's going to happen. Nobody knows what can happen. It's a once in a lifetime situation. The national debt is over $31 trillion. The amount of interest that we're paying on that debt is ridiculously high. There's a lot of debt in the system. There's a lot of leverage in the system. Um, and inflation's not going to go away despite what the Fed says. They've been lying all year. Like if you want to believe them, go ahead, but believing them has definitely not been a good trade. So so yeah, that's pretty much, you know, what we do there in the trading school. I'm going to go ahead and just kind of show you guys a little bit more here. I'll make sure to post the link there for you guys on the YouTube side. Lito, if you want to learn, I mean, yeah, we just make sure to send me an email, Lito. I'll talk with you, bro. Let's see, you know, what we can get you in here. But I really highly suggest that you guys trade with Mark and learn with Mark. Even if you've been trading for 5-10 years, that doesn't mean you have it down. Like even advanced traders are like constantly learning. It doesn't stop. The learning never stops. Education is a lifelong process. Okay. Let me just change something here. Okay. All right. So education is a life. If everybody can hear me, let me know. Put me a 1 in the chat if the audio is good. But basically, learning is a lifelong process. You can't really think that, you know, you're going to, as soon as you graduate high school, you're going to be like, you know it all, or graduate a university, or just because you have a master's or an MBA, you think you're better than other people. Like that doesn't mean anything in the markets. I have a 10-year finance background. I'm just the same as somebody that's coming from a totally different background when trading, when you're starting to trade. You know, I've signed up lawyers, doctors, nurses, people from all over the world in this trading school. It all comes down to having that mentality, that open mindset mentality that you're here to learn, because we're all here to learn from Mark. Absolutely. There's nobody that has his experience trading with people like Steve Cohen or Mario Gabelli. Mario Gabelli was Investor of the Year in 2011, if I'm not mistaken. And Steve Cohen, both of these guys, like Steve Cohen and Gabelli, they both run funds that are over $35 billion. Okay. So Mark has traded with big money. He's managed pensions. He's been a money manager, all that sort of stuff. So I really think that if you're looking for an instructor, you need to find somebody that's been around big money, that's traded around it, that's learned from it how to trade, and that really has that good teacher ability, right? Where they are actually they're good at being teachers. You know, like there are some people that can be experienced, but they're just bad teachers. In this case, I feel Mark has everything that you need in order to help you out, not just with trading. Keep in mind, I'm trading options. Okay. I've been trading for about 4 years now, and I still go to the trading school. Okay. If I have time, of course, because I'm so swamped with this, what I do here. But definitely, if you have some time, I highly suggest you check out the trading school. The classes are Monday to Friday. You have all the recordings there. It comes with Benzinga Pro. PDX, what's up, PDX? What's your chat on the school? Because like there's people that I talk to on the school, and they have like a username there, but then on YouTube they have another username. So, and that's pretty much like what's all in my head, a bunch of like YouTube handles. Like it's super confusing. But PDX 4 EST says I wake up at 4 a.m. my time every market day for Mark. That should say something. That says more than enough. PDX, because if you wake up at that time and you're in California, but more importantly, here's the thing: having that class in the morning before digesting what's happening in the markets, it's so important for me. Like this past couple of weeks, I've been in the school. I've just been listening to Mark. We open at 9 a.m. So between 7 a.m. and like 9 a.m., I always have Mark's class, like, playing out there. I might be answering emails or making breakfast, but I always have Mark's class there in the morning. And it helps me a lot because I have to pretty much prepare for the day. I have to think, okay, what's happening? How does Mark perceive this market, price action? How does Mark feel about this stock? Or how does he feel about the markets, or about the GDP print, or about the Fed meeting, right? You definitely want to make sure that you're trading with professionals like Mark, because eventually you want to become, a good trader. You're here because you want to make money trading. You're not here because you want to lose money. You're here because you want to make money. That's why you should be here at least. So once you get into the school, like for example, if you've ever felt like, oh, like, why does every time I buy a stock, it goes down? Why am I always buying the top? Why am I always selling at the bottom? Like those kinds of things, it 100% means that you need to learn how to read charts. That's what it is. And keep in mind, like, a brokerage is not going to give you a manual on how to trade, because they don't care if you win or you don't. They make money either way. They churn your account. Making money or not, you're always paying the brokerage. So if you're just here to lose money, you might as well send a check to Goldman Sachs. But if you're here to make money, I really think you should take the trading school, because it's really going to show you a lot of things and you will pretty much have a lot of aha moments, like connecting the dots, like, oh, well, that's why. Oh, okay, that makes sense. So it really is just important to not, like, to focus on the right things, right? Don't focus on the things you shouldn't focus. Like, turn off CNBC 100%, close it, and focus on your Benzinga Pro, focus on your classes, okay? Because ultimately, remember that there's a big difference between a journalist, a reporter, and an actual trader, right? I could personally care less what happens to Citadel or any of these huge brokerages, right? I'm here for the little guy. I'm here for PDX, for Double H, for Born to Be Free. I'm here for Steven. I'm here for John. I'm here for the average guy. That's what I'm here to do. So I can tell you 100% for sure, not just based on my experience and my mistakes, but also from the 8,000 traders I've talked to since I've been here, turn off CNBC, okay? And focus on what matters. Reading the charts, technical analysis, that's the name of the game. Let's go through some of these chapters, okay, folks? Let me just show you some of these chapters. And keep in mind, we have all this while we're looking at, the cues, seeing what happens, right? We're going to have another leg lower. Let me just check some stuff here really quick. Let's look at Apple. Okay. Microsoft. Oh. Okay. Let's pull up Tesla. Okay. Hopefully it gets rejected right there at that 225. Let's pull up Amazon here. Double H says Mark is a great teacher. He truly wants his students to be successful traders. That's what we're here for, okay? Mark and the class family is the best. PDX, thanks for being part of the family, okay? You guys make the dream possible, okay? You guys, all the members, like, I'm not sponsored by Citadel. I'm not sponsored by any of these hedge funds or nothing like that. I'm sponsored by the individual trader, okay? By the individual trader all over the world, okay? That's who sponsors me, you guys. So Amazon, hopefully it breaks that. I don't know who's shorting or not here, but I'm just kind of going through what's included on the cues because that's what I'm trading. So let's see what's going on here. So we made a new low a day there, okay? And you can pull up like nice levels here. Let me show you. Okay. See that? How is he? All right. Okay. All right. Let's go through some of the chapters here, folks. So you have momentum, trends, levels, introduction and philosophy, market principles, analysis and sentiment, investment psychology. That's my favorite class. 100% my favorite class. Patterns, okay? Patterns, super important. I swear to God, you have no idea how many times I've looked at a pattern. I'm like, no, no, I don't think so. And then boom, pattern turns into reality. Always, always know your patterns. I'm not saying you can read the future, but you'll get a good sense really of what could happen and how you can prepare it, right? Um, one of the things that's keeping me in this Q position right now is really Microsoft because it's falling so hard right now. And then there you go. Apple got rejected from that level. Let's see if Tesla got rejected from that level too. Well, I mean, it hasn't even gotten there. Well, I didn't even put a line. Okay. Was it Amazon? I don't remember which one. Where did we put that damn line? Watch list. Okay, I have a bunch of watch lists here. By the way, you can build as many watch lists as you want. We have this thing right here that it says, why is it moving? That is Randy and I think Abdul. It's a department of people, like real people that are scanning the markets, and they're basically like, hey, why is this moving? They look at the news, they look at the price action. So a group of people that are constantly scanning the markets. So a big shout out, of course, to Randy, who is in the Detroit office right now. Let's go. Let's go, Randy. All right. Thanks for hooking it up. So let's find this this thing that I had, this line, right? So I have a watch list called Qs. Okay. Let's look at Tesla really quick here. Okay, Tesla falling, love it. Nvidia is still up. But I mean, who knows for how long? But it's included on the Qs. That's why I have it here. Okay. Looking at Microsoft. Hopefully it breaks that low at 226 and then goes below that 225. Facebook still going lower. These guys might just like, I mean, who knows how low it can go? I think Facebook, who knows? I hope they go lower. I definitely hope Facebook goes lower. For thinking about metaverse and all that crazy stuff. All right, Google. I noticed Google's price action was crazy and interesting today. But look at this. Google, I think, is the only one that hasn't broken the low of the day. So Google's strength is now becoming the QQQ's weakness. Well, strength. Well, I mean, going down, if that makes sense. So let's look at the Qs. Pretty sure they're falling hard right now. This is a 5 minute. Let's pull up a 1 minute. Okay, so we looked at Google. Let's look at Amazon really quick. Okay, this is a 1 minute chart for those that are asking. So you can see how fast you can switch through charts. You can do all this stuff literally like from the comfort of your home and trade, right? So perfect yellow and purple candles. That's because I'm an LSU Tiger PDX. So I customize my charts that way. Purple, yellow, well, gold and purple, right? Purple and gold. Yeah. Rod, you need to share your trade ideas in class more. I don't know. I don't know, man. I don't always win. It's, sometimes I win, I don't know. So, but Mark is the guy that you got there. I'll pop in here when I'm trading, but I'm honestly not trading all the time. I'm so slammed with work and other things. So now if I see volatility in the markets, I'm in. So if there's something crazy happening, like Apple's falling apart, or we're just ripping to the moon, like some really, really good positive news or some really negative news, like it just depends, man. Like if we're just going flat, like I don't want to trade. If I see that there's a lot of volatility on either side, yes, I will trade. I'll get in there and you know what I'll do, TQQQ calls or SQQQ calls. It's pretty much all I trade, and that follows all these stocks that I'm looking at. Mega cap, all these mega caps are the last to fall, right? So they're not immune to this. They were immune at the beginning. I don't know if you guys remember, like a long time ago when like all the market, like everything except like mega cap was just horribly, like PayPal was down like 80%, and we still had the indexes like near highs, right? And that's because of the mega cap stocks. They were the last to fall. So I think these companies are so large and they have so much momentum. It's going to be hard to stop them from coming down. So you see that Apple got rejected from that that little line we put in here while we were live. So I do that sometimes to kind of get the sense of like, okay, if it breaks this and it keeps going higher, then maybe I should take profits. But if the price action is still bearish, why am I going to get out early? I don't like leaving money on the table. That's probably the worst feeling that I ever feel. So is it okay? No, I understand. But that's I'm trading the volatility. So if I know that if this gets rejected from here and maybe it keeps going lower and it continues to make a new low of day, that's going to be an extra, I don't know, 20-30% on my calls, SQQQ calls. I don't know. But I would like to see some rounding bottoms before I decide to take profits on my puts that I've had literally since the morning. Okay, I've pretty much announced this everywhere that I could have. Not everywhere, but in the trading school and all this stuff. And also with, I think in the live trading they had here with Money Mitch, I'm still holding those puts. I haven't sold a single put. I still haven't. Well, the calls on the SQQQ. So calls on the SQQQ is like still, it's bearish, right? It's still a bearish trade. The only thing is that you're buying a call on something that goes up when the market goes down. And there you go, Apple's going down. So if Apple's going down, the Qs are going down. It's the largest holding they have. Let me pull it up. All right. So something else is holding up this. I'm not sure what it is. But pretty much the goal here, guys, is for you guys to see how you can use Benzinga Pro for your trading. Double H or a Ravens fan. My roommate in LSU was a diehard Ravens fan. Yeah. So let's look at these charts a little bit. 1 second, folks. Okay, we have Tesla. I need Tesla to fall, guys. All right. I need Tesla to fall. It's the only thing that's green here that is pretty much covered on the Qs. Okay. So NVIDIA is not even like a large holding. The largest holdings are actually like Microsoft and Apple. So Microsoft, remember I told you Microsoft looked weak. I mean, that's kind of why I'm still in trade because of Microsoft, because it's one of the largest holdings there. And look, it's still falling. I hope it makes a new floor there. So I mean, let's just hope we get it, guys. All right. Because I don't know if anybody on the trading school took this trade or not, but we were talking about the SQQQs for a while, like I think since like 12 p.m. or like around there. So I'm looking at Microsoft and I'm hoping it can make a new low of day. That would pretty much mean it would have to go under 225.80 at least, like under 226. So 50 cents lower or $1 lower. This is nothing for a $226 company price. And then the other one is Apple. Let's see where Apple is. Kind of holding, but see what's going to go try to test this again. So just to give you a little bit of an insight, right? Really what goes through a trader's mind, how they use Benzinga Pro, how I use it for my type of trading. I don't know what type of trading you guys do. It's obviously different. We all do different stuff. Nobody's the same. But I do know that Sean D here, I don't know if he's in the class here, but he was in the class. He trades this stuff as well. I think he was on the YouTube side. You buy the TQQQs and the SQQQs, right? There's not a lot of people that like to trade that way because of the volatility, but that's really all I trade for. I'm not here to buy and hold for 10 years. I'm sorry. I'm here to try to make money today and that's it. Kind of like living for the day almost, because you don't know what the market's going to do tomorrow. Like nobody knows, especially today. Like it's never been more true. So all I'm saying is that this is a trader's paradise. Benzinga Pro is a trader's best friend. It's my best friend. I don't trade without it. I literally never open a trade without Benzinga Pro, without seeing, hey, what's happening? Let's check the news out. So you have all that stuff in there. So even if you're trading stocks individually where you can go pull up a scanner and look at what's up today, let's see. User up 92%. What is going on here? User testing shares are trading higher after the company announced it will be acquired by Thomas Bravo and Sunstone Partners for $1.3 billion. The company also reported better than expected Q3 sales results. You know where that came from? You know who put that up there, that little message? Randy from the WIM team. Big shout out to Randy. So there's obviously a ton of people behind this platform. There's coders, developers. It's been around for 10 years. I don't think you should be trading at all without it. I just really don't. I mean, and I know there's other stuff out there, but nothing really, it doesn't even come close. And I've used Bloomberg's, I've used all these other things. Trust me on that. Pro is the top of the top, right? So let's go back here to just look at this, folks. I think we're kind of going to wrap it up here. Yeah, we're definitely going to wrap it up. We've been here for a while. And okay. All right, folks. So I think we're going to wrap this up here. A big shout out to all you guys. Big shout out there to all the buddies, all the friends, all the members. Some of the members are my friends. Actually, I consider them friends. Being here, I've had the pleasure of meeting some of them, and it's been great. It definitely has been great. The members are awesome. I know that when you come in here, you're going to have a great time. You're going to learn, you're going to make money, you're going to be there with the best. So if you do have questions, we have the contact there in the chat. Hey, come on, PDX, we got to thank Randy. Randy is like Mr. Wim, okay? And he does that every day for all the traders. Like, again, there's a huge team of people that work so hard to make all this stuff a reality, you know, so that you can trade comfortably from your house and make money. But yeah, it's definitely been a pleasure, folks. I appreciate you guys being here. If you have any questions, reach out. Born to be free. I love you, dude. Hopefully I can see you again in New York, and anybody else that wants to come. So big shout out to everybody. Hope you guys have a great day. Happy trading. Make sure you join the school. Make sure you join the school, okay? It comes with Benzinga Pro. It comes with all the tools. Lido, I don't know, sometimes for a day, sometimes for 2 days. Yes, Double H, Pro is a monster tool. And if you have questions on Pro, you can reach out to. Yep, send over an email. I have the contact there if anybody does have questions. Have a great day, folks. We'll see you next time. Big shout out for Mark Putrino. Big shout out for everybody here. Big shout out for me too, right? Let's go. All right. Have a great day, folks. We'll see you in the school.